Hello, everybody. Brian here from quantlabs.net. Yet again, we are at 3 o'clock East Standard Time, April 7th, Thursday. So let's check out what's going on in the markets. I have been talking about this for a while. I do believe we are still in downward pressure globally, as you've probably heard about the Federal Reserve. Things are slowing down here in the housing market. Here's the latest headline here. Another 166,000 likely filed new weekly job losses. So it's more bad news here on Yahoo. You can see it's barely up. Was down quite a bit earlier today. Oil is up. Gold is up. The currencies is where things are at for investment. I'll tell you that. Bitcoin's down quite a bit, actually, 4%, but the alternatives, the crypto 200's up 1%, and then the British and the Japanese are down. So this is what we're dealing with right now. Everything's tied together. Now, yesterday I put up videos knocking interactive brokers, but I want to show you a few things here that impact that decision. So once again, we have another trading basket. This one's generated today, and it's today's 7th or 8th. Yeah, I got the 7th. Anyways, here in blue is a trading basket that we just generated. Here's the run-of-the-mill, no growth in the S&P 500. So if you want to generate wealth in these really tough times, even though there may be a job out there, you got it, and we also have to factor in inflation as well, another form of tax. So here in the blue line, this is the trading basket. So you can see here we're getting annually here 71.8%, while the S&P benchmark will give you 11.2%. So these are all fine and good. Some say it's volatile, which you could probably say it is, but look at this performance for this year. Even if you net out that, you're still farther ahead. It's no different than if you were to hang on to Bitcoin, Ethereum long term. You'd blow away that performance. So what I don't get is that. But here you can see it's been very few drawdowns. 1, 2, 3 for the year. This is probably one of the more safer trading baskets that I've come across. I can't remember how many there are, maybe 6 to 8 instruments. Most of it is currencies, long term. This is where the growth is. There's no equity, there is no gold, no oil, and I'm pretty impressed by this yet again. So that's where that is. Now, this is what we're going to be doing in the next few days. As you know, my quantlabs.shop, we have a bunch of product. Been hinting at this for a long time, and under catalog here, what I'm going to be doing is merging everything except for the Python course and maybe a few other little product will be put into this membership, the Quant Elite. So if you're a programmer, not a programmer, but want to know how to build, trade, build wealth, this is what you'll need to get minimum. It's for a year, and then I'll be merging these two into that membership, but keeping the Python course as well, which I'll probably have to update with what I'm planning to do. So I need to make this product listing really easy as possible instead of confusing people when they come here. So as it stands, that's the goal. If you want to know more, get on my email list. I'll be pushing this out a lot. So for those that are not interested, as you know, most do the smart thing and drop off, which is fine. And then you just fill in your info. Once you get to quantlabs.net/contact, you can just fill out all your info and you'll get into our newsletter. If you don't engage with the newsletter, you won't get as many emails, so you won't know everything every day. So you choose. But This is the future we're going in. I'll also be putting out some news about not trading crypto direct anymore. I think it's, from what I've seen, it's too high risk, too volatile on the negative side, but there are smart ways to get around that. Again, that's where interactive brokers come into play, even though I do trash interactive brokers, because there's really no other broker to go with at their size, so you're kind of left with that. And I'll talk about that in the next video. Alright, so that's for now, and thanks for watching. Have a good day.